Welcome to Make Your Money Matter. I'm your host, Brad Barrett. I'm also a managing director and partner here at One Capital Management. Before I begin today, I wanted to thank each and every one of our subscribers. We recently hit the 1,000 subscribers and we're so grateful for your support. A little over a year ago, I felt it in my heart to start this channel. It all takes a lot of time and effort and planning, but we do this for all of you so you can better understand in our world what we feel like, understanding your finances and your investing. So again, thank you for tuning in. So market cycles. The more you study them, the more you see them for what they are, like changing seasons. So today I'm going to break down this analogy to help you understand the market and possibly better understand yourself when it comes to investing. But before we do, you know what to do. Smash that subscribe button, hit the notification bell so you don't miss a single episode. All right, let's get into it. Friends, the old market wisdom, as everyone knows, is what? Buy low, sell high. But most people, if you look at it, by and large that I've come across, buy high and sell low. Why? Not because that they don't know what they're doing, but because they invest with their emotions and follow the market sentiment with no real strategy. Let's put it this way, friends. We're coming off winter, although, dang, this winter's been long for us here in California, like we all know, but we're coming off winter. We are in spring now, technically, hence my pink shirt. Hope you all like it. Think of market cycles like seasons and think of what we're going to be coming into with our next season of summer. Summer's like a bull market. It brings growth and optimism, but winter, for many of us across the country, it's like bear markets. It's a time of maybe sluggishness and maybe decline, and however you want to look at it. But just as seasons change, so do markets. That's what I want to share here. One thing to keep in mind is that the quote unquote winter paves the way. If you think about it, for a new summer, you've heard that term before. So when you think about seasons, you have to make sure that we don't get lost in a season of our life, or my analogy here, just seasons of the world. We don't want to get lost in one season, then not be prepared for the next. I mean, take this for example. The stock market, as we all know, has been around for a long time. The stock market survived the Great Depression. It survived things like World War I and World War II. It survived 2008 financial crisis, and obviously several other events through the course of history that likely have made it feel to many of us that the economy was close to collapsing. I think any one of us, no matter what age, you can very easily disseminate here sometime in your life where you thought that this is it. This is the big one. We're not going to recover from this one. And I'm not sitting here to say that will always be the case, but you look at history and you should be prepared for that next season, right? If you look at each time, and this is just historical data, the market, friends, recovers. The market is a lot more resilient, I think, than most people give it credit for. So you really shouldn't touch your portfolio unless you're gonna maybe go back to buy more during volatile times. I mean, obviously that's a blanket statement, by the way. I mean, this is something you should speak to your advisor about, but bear markets many times, if you look at history, equals long-term opportunities. I want to share that today on the show. So again, back to my season analogy here, make sure that you don't get lost in one season, not prepared for the next. And if you look at a winter season where it might be a bear market relativity, you're thinking, we're never gonna get out of this. It's just cold and bad, bad, bad. And if you look at it from a different light, and I share this a lot, you know, what you don't do during bear markets or volatile markets is more important than what you do. The whole idea of not touching your money during volatile times might actually be the best approach for many investors out there. Again, this is something you want to talk to your advisor about or go through yourself even with your own investments about your specific situation. But it's really important because the overreaction can sometimes lead to poor decisions. Something to go through really when you look at market theory and just understanding the cycles that it goes through. And I'll end on this. If you realize and understand that the stock market doesn't always go straight up, and you know that, and I think anyone can be pragmatic with themselves and really look at yourself in the mirror and say, yeah, I know that, Brad. Then you got to think, why would I react during some of the blips in the market if I know it generally over time goes up, but it doesn't go up in a linear line? I'm going to have market cycles. I'm going to have volatility. Sometimes breaking it down to like that first base level, it makes a lot of sense before we get all wrapped up in some of the noise of this world, which by the way, again, there's a ton of noise. The one certain thing I know about investing, like life, is that there will be uncertainties. And so the reality is managing our portfolio around the uncertainties, you can't eliminate them, my friends, okay? So we have to encompass them in solid diversification, solid market strategies and asset allocations, rebalancing all the active management that a portfolio manager should be doing for you. That's where it matters. Hope you enjoyed the show today. If you did, subscribe to our channel and always remember to make your money matter.